16 accounts, 4 currencies, 2 properties, and 3 retirement systems can look diversified while hiding one simple risk. You cannot explain the whole system fast enough to make a clean decision. Simplification does not mean selling everything or moving custody to one institution. It means reducing the number of places where context can disappear. The WealthMap test gives you 5 checks for doing that without pretending every asset is the same. Picture a cross-border executive. One brokerage sits in the United States. Retirement money sits in Canada and the United Kingdom. Property, private equity, debt, and cash live elsewhere. None of those accounts is wrong. The missing object is one decision map. The WealthMap test has 5 checks. Inventory asks what exists. Currency asks what each number means in one settlement unit. Liquidity asks when it can be used. Cash flow asks what repeats. Ownership asks who controls the asset and where the record lives. Start with inventory. Our synthetic household owns $1.42 million in financial assets, $980,000 of property equity, $520,000 in a private company, and $190,000 in cash, against $610,000 of liabilities. The first metric can lie. More account statements do not automatically create more diversification. 3 funds in 3 institutions may hold many of the same companies. Count exposures and obligations, not login screens. Currency is the second test. You can keep the original units for accuracy, but decisions need one settlement currency. Otherwise, a rising exchange rate can make the headline grow while the cash needed for a mortgage, tuition, or relocation moves the other way. Liquidity is the third test. A diversified private company stake may still be unavailable for years. A property may be valuable but slow to sell. Label what is usable within 30 days, what needs a buyer, and what is contractually locked. Cash flow is the fourth test. A $24,000 monthly salary and $3,200 of rent look strong until fixed costs, debt service, and a $60,000 annual education goal are placed on the same calendar. WealthMap separates recurring and one-time cash flows so the balance has an operating explanation. The point is not automation for its own sake. The point is knowing which commitment changes next month, next year, and after income changes. Ownership is the fifth test. Record who legally owns the asset, which institution holds it, who can authorize a sale, and which life goal depends on it. Those facts matter during inheritance, relocation, divorce, incapacity, or a simple transfer. The hidden cost is decision latency. In this synthetic case, 12 hours a month disappear into reconciliation, 3 spreadsheets disagree, a debt reset is missed, and an allocation decision is delayed. The cost is not the spreadsheet, it is the decision you cannot trust. A useful map keeps the layers separate while showing their connections. Stella WealthMap uses a 7-ring panorama for asset mix, custodian, currency, net ratio, growth, income, and expenses. The rings are lenses, not a claim that one number solves everything. In the real home view, the net position, expected cash flow, debt maturity, runway, and the ring-based asset breakdown are visible together. This consolidates visibility. It does not move custody, trade assets, or replace the underlying institutions. Complex systems need deliberate inspection. Scroll down to the lower rows, pause on the assumptions, then return to the summary. That down and up movement is how a person tests a model, instead of passively admiring a dashboard. For privacy-conscious households, a simpler view should not require broader bank access. Stella WealthMap uses zero-knowledge encrypted cloud storage and no bank linking. The precise claim is that the server cannot read the plaintext financial numbers, not that every security risk disappears. Your next action is one page. Inventory every position, normalize currencies for comparison, label liquidity, connect recurring cash flow, record ownership and custody. If a major decision still requires opening 6 apps, your map is not finished. 16 accounts are not the problem. 16 disconnected explanations are. Simplify the view, preserve the real ownership, and make the next decision from one map. Which part of your financial system creates the most reconciliation work? Start free at wealthmap.arcstella.com.